Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back KS family. Our community's mission is to bring more kindness, integrity, skill, and real wealth to the world via crypto. Let's run the numbers. What we're basically going to look at today is a Wells Fargo Investment Institute report from Feb 2022. They're suggesting that Bitcoin is near hyper adoption. This is actually a really good piece of news for the crypto industry as a whole, and we're going to dive more deeply into this. One thing that you might like to do when you're looking through crypto is to always go to the source material. It's really important to get it straight from the source. What you will find is many times news outlets actually embellish things or can misrepresent data. Always go to the source. Just pay particular note to this chart. I've marked it up a little bit differently. So the first question is, who are or what is Wells Fargo? Wells Fargo is a community-based financial services company. It's engaged in the provision of banking, insurance, investment, mortgages, and consumer and commercial finance. But how big is Wells Fargo? It has market capitalization of nearly $223 billion. It has annual sales revenue of $82.41 billion. It's a pretty big organization. What about its financial health? It has nearly $2 trillion worth of assets. When we look at the Wells Fargo website, we can see it's basically a bank. What are the competitors of Wells Fargo? And note that Wells Fargo was founded in 1852. This is a very old and established organization. Its competitors include Bank of America, JP Morgan Chase, Citi, Goldman Sachs, and BNP Paribas. Why is it important? Why do we care what the competitors are of Wells Fargo? If Wells Fargo brings out a research report, we know because of the way institutions work, these other institutions will be gunning for business as well. It's a very hyper-competitive area in the top corporates. And we saw that yesterday with KPMG's announcement that it's put Bitcoin and Ethereum on its corporate balance sheet. This is really important to understand. When one moves, they all move. What I've done is to take excerpts out of the particular research report and just blow them up here so that you can see them more effectively. I've just taken out what would be the key messages as well. When we look at chart 4 from page 7, we see internet usage history versus crypto. And you may look at this and say, Ken, why are we looking at internet usage and crypto? Aren't they completely different things? Like internet, oh yeah, that's how I view Netflix. And that's how I do my banking. And that's how I pay my bills. Oh, and all of those things. But what's crypto got to do with the internet? They're really fair questions to ask, especially for people who are new into crypto. Crypto is the next evolution of the internet. They call it Web 3.0. It's the internet of value. It's really interesting that back here in 1993, I ran and operated and owned an internet service provider. I basically supplied the internet to various departments, government departments, big companies, and forward-thinking individuals. That was literally the birth of the internet. And it's really interesting that I've been looking for these kind of internet-based opportunities ever since. Because when you look at what the internet did, it caught a lot of people by surprise. Wells Fargo is saying, for today's investor trying to figure out if we are early or late to crypto investing, look at technology investing in the mid to late 1990s, just here, seems reasonable. They go on to say, at that time, in the mid-1990s, the internet hit hyper-adoption phase and never looked back. Cryptocurrencies appear to be at the same or similar stage today. This is really important to understand. When we look at the internet companies, can you name a couple just offhand? Could they be stuff like, or companies like Amazon, Meta, Facebook? What about Google? Oh, That's really interesting. Alphabet. They are some of the largest companies on the planet now. That should give you an indication of how profitable the internet has been. And crypto is the next evolution in the internet. Technological adoption occurs in different ways. It can be an S-curve. It can start really, really slowly and then just hit an inflection point and ramp up and then level off when most, if not all, people are using it. This is something to be aware of. What I've done here is I've just looked at that chart from page 4 of the Wells Fargo report, and I've just drawn in things to make it a little bit easier to understand. You can see that the S-curve does not start at the bottom. Crypto was actually introduced, the first transaction, 3rd of January 2009. This is important because it's back there. So it's been slowly growing, and now it's starting to take off, just like this. What we see is electricity took some time to actually be adopted. Automobiles, cars, time, color TV, the cell phone or mobile phones, and look at the internet. You don't have to be any form of mathematician to understand crypto is really tiny and it's about to go up, and it's being adopted at an increasing rate. What did Wells Fargo actually say? We believe the cryptocurrencies are viable investments today, even though they remain in the early stages of their investment evolution. This is the investment evolution. Can you imagine actually buying Amazon or Facebook, now Meta, or Google in the very early days? You would have done incredibly well, but you would have to have been very forward thinking, and you would have to have understood the disruptive potential of the internet. And they also go on to say most of the opportunity lies before us, not behind us. And you can see that's clearly the case. A lot of people unfortunately think from a retail mindset. A retail mindset is not how money is generated. Institutional mindsets are all about the markets. When we look at the size of the cryptocurrency market in trillions of dollars, crypto is a really tiny market. 2 trillion compared to the stock market around 120, and the bond market around $123.5 trillion. It's really small. However, many retail investors think that there cannot be enough stimulus checks to go into cryptocurrencies. That is not how institutions think. Institutions do not rely on stimulus checks. Unfortunately, many crypto influencers on YouTube and around the different social media channels do not have an institutional background. They don't understand how money works. I'll just give you an idea. In 2020, 7% of the money supply was physical. Just let that sink in for a minute. 2020, a couple of years ago, before we had massive money printing, 7%, $7 out of every $100 that existed in the world could be actually attributed to something that you could put in your hand. That is a very scary proposition. 7% physical, but people don't understand this. Basically, the world of finance is driven by ones and zeros. It's digital by nature. You would have heard a lot of discussion about central bank digital currency, CBDCs, being introduced. They need to do this. It's absolutely imperative to prevent bank runs because they don't have enough physical cash to cover things. If you go into the bank and you withdraw any sizable sum, they'll say, come back in a week. We're going to need that time to find the money. Coming from a background in finance, I have a finance degree. I've worked within the banking sector and system, and I've been involved with financial markets for more than 3 decades. I understand how large corporates, how the big multi-billion-dollar multinational corporations think about things. And one thing is very certain, they must digitize. This is why Wells Fargo and of course all the other banking institutions, they need to go digital, but they need to handle it in a very specific way. I can just show you another thing. When it comes to the derivatives market, and what is a derivative? A derivative is a contract between two or more parties that derives its value from the performance of an underlying asset, index, or entity. And they could be futures contracts, forwards contracts, options, warrants, swaps. But the really interesting thing is the notional value of derivatives is $1 quadrillion. That is a lot of money, and that money will naturally find its way into the crypto space. So the concept that crypto cannot increase in terms of market capitalization is not only erroneous, it's ignorant. This myth is perpetrated by retail mindset influencers. You must be very careful of who you listen to. And Wells Fargo says it as well on page 9. And this is really important to understand as well. The level of risk associated with a particular investment or asset class generally correlates to the level of return the investment or asset class might achieve. So that's basically saying the higher the risk, the higher the return. But please note, the higher the risk, the higher the return. Crypto is really risky. It's very speculative. It involves a high degree of risk. Many particular influencers are nothing more than con artists. They basically say you can't lose in crypto. You will make guaranteed money. Not true. And what Wells Fargo is doing here is calling it out. You make money in crypto by having the skill. It's a professional discipline. And believe me, it's a really tough market. If you don't have the knowledge, you probably will blow up your account. And the same holds for the stock market or Forex. If you don't have stock market knowledge, you'll probably blow up your account if you get in there. You don't have Forex knowledge, you will blow up your account. This is the way that it works. People expect big returns without investing anything in their knowledge. That is fantasy. And what Wells Fargo goes on to say, investors must have the financial ability, sophistication, experience, and willingness to bear the risks of an investment. So true. This is really important to understand. And a potential total loss of their investment. An investor could lose all or a substantial portion of his or her investment. And I see it all the time. I see so many people fire the gun like this. They pick up the gun of crypto investing and trading and they fire it, not knowing the gun will shoot them. They don't aim. They don't actually get the knowledge. They don't know what they're doing. And they then get really upset because they lose their money. And some people have a lot of money. It's not necessarily small traders and investors who do this. Some people have literally millions of dollars, but they're so stingy that they will not invest in knowing how the game works. That's really damaging. A lot of people feel that they will miss out, and unfortunately that myth is perpetrated by a lot of influencers. I want to say and share something completely different with you. If you do not attain the knowledge, if you do not know what you're doing, you will lose money. Markets have a cost of losing money no matter what. Even if you know, markets pay. The cover charge of markets is to pay through it by losses. Losses are unavoidable, but if you don't know what you're doing, you'll try and hit a target and you won't know which direction, or you'll fire off arrows in all directions seeking to just make some sort of profitable investment or trade, not knowing that you should never have pulled the arrow out and shot it off in the first place. Please be aware that crypto is like this gun. Yes, it's a definite Photoshop gun. Guns are not like that normally. But if you get the crypto gun in your hand and you just want to fire off and put money into the market with no real understanding as to what you're doing, you will suffer financially. So what is the actual way to profit in crypto? You can be continuously profitable, but it requires patience and it requires a very specific focus. For example, Rule 812, price tells the truth. The price of any crypto is the reality of that crypto. People can say whatever they want. They can promise the world. For example, Rule 74, technicals beat fundamentals. But what does this mean? Technicals, or price, is the reality of the crypto market, and the crypto market is actually buffeted around by various other markets, such as the stock market, the bond market, the precious metals markets, all sorts of things. People think that they can just look at a crypto chart and know what is happening. You cannot do that. The last thing that you should be doing is firing. You need to spend a lot of time getting ready, a lot of time figuring out how to aim exactly at that bullseye. And the last thing you do is fire, not the first thing. To understand price movements in any particular market, we use a thing called technical analysis, or TA. There are traditional TA methods, and they revolve around a foundation of candlestick charting. Candlestick charting doesn't apply to crypto. It gets very distorted, and I see so many times analysts that come from the stock market and the forex market with the best of intentions, not understanding that crypto is completely exponential by nature. That means when it actually moves in price, it catches so many people off guard. They're just not prepared for the volatility. The volatility is extreme in the crypto market. That's what led me to create a crypto-specific methodology that you could use to determine what is happening with price and profit from it. It's called the CTKS method. If you'd like to look in more detail about the hidden dangers of candlestick charting in crypto, please have a look at episode 425. A lot of investors in the market really don't care too much about where they enter, and the problem is this can be very, very damaging. For example, say somebody bought up here because they saw price coming up and up and up and up, and they felt very certain that they were okay, so they entered at that point. Let's draw it to basic current price action. Over the span of the next 301 days, that person lost 29.58% of their investment. Now, it's in all likelihood, they wouldn't have lasted that long. They probably would have sold out down here. For example, let's just do an equivalent thing. Say they sold out when this other particular investor, whether through luck or knowledge, started to come into the market, because this particular investor or trader saw that they were going down so much and listened to all the social media on Bitcoin going to zero, and then said, okay, it's about a 50% loss, I'll just sell. I can't stand it anymore. It's been coming down for 70 days. I'm out. And that's where another person bought that sell. What happened to that person over the next, for example, just getting it up to current price action, over the next 231 days, that person is up 40%. It really does matter when you enter and when you exit. And a lot of times, retail investors enter at exactly the wrong time and sell at the wrong time because they're too focused on what the media says. The media is not your friend. Your friend is knowledge. The reason that the crypto market is so incredibly volatile is it's open 4.17 times longer than traditional stock markets. Please bear this in mind. Also, another thing, it's very famous in the crypto market. Institutions hunt stops. They liquidate people both going long and short, and that can happen in just a single 15-minute time frame. So how do you overcome this problem? The key is to go slow, to go fast. You must know the rules of the game if you are to play. If you just hop into the crypto market expecting to make money from very little knowledge, you will be very disappointed. This is a professional's paradise. Professionals can consistently make money inside the crypto market, and it doesn't matter if the price is coming up or down. There's always opportunities, and they reset every day. What basically happens is when people come across from the stock market or forex, they apply technical analysis from those industries. Unfortunately, for many reasons, it doesn't apply to crypto. When you get into crypto, even if you've been in the markets for years and years, you need to unlearn what you've learned in the stock market and Forex, because that will actually crush your performance in crypto. The foundation section of the Crypto Trading KS Masterclass will teach you the basics of what you need to know, step by step, just lesson by lesson. For many years, I lectured first and second year statistics, and you do not need a mathematical background to understand the crypto industry. What you will see is that each lesson builds on the previous one. It's all very, very practical. Just follow and use the particular charting method that I put into each of these videos, and you'll build your knowledge up so that when you aim, you're going to hit the target. Also, the CTKS method helps to avoid actually learning any candlestick patterns or charts or names. You don't need to know them. You get a very specific way of understanding crypto movements. One thing that you should always bear in mind, if you look for a pattern, you'll probably find it, even if it doesn't exist, and that can be very damaging to your financial health. Also, the CTKS method gets rid of all of this entry and targeting and all of these things. You don't need to know that. It's inbuilt inside the method. You literally learn one thing and you can apply so many things to it. The reason that I created the Crypto Trading KS Masterclass was to pass on my knowledge gained over more than 3 decades inside financial markets. I've seen so many people just shoot the gun and basically blow up their accounts time and time again. I wanted to make sure that I pass my knowledge across to the next generation, because it will actually increase your financial blessings and the financial blessings of those you love. And that is the whole focus behind the masterclass. I've left in the description of this video, the URL for the masterclass. It's at www.cryptotechnicalanalysis.org. You can actually get 80% off by contacting ambassadors, and the ambassadors can be contacted by just going into these buttons and reaching out to them on Twitter. An 80% discount is really, really good. More importantly, if you are interested, I would suggest that you play this video on the testimonials page about the reasons why I created this. And then there are a variety of different people who have reached out and given their feedback about the masterclass and about how they've found it. You might like to look through that as well. We have many people from all walks of life, and some have incredible experience in the stock market and Forex as well. We have a beautiful group of people who are actually over 70 years of age, and they are going through the lessons. They're just magnificent people. You do not need a mathematics or finance background. When I was actually lecturing first and second year statistics, I used the numbers 1, 2, 3, 4, 5 because I do not believe in making things complicated. I believe in you understanding, and you will need to understand when you get into crypto. If you don't understand, you'll just make the wrong decisions. Rote learning doesn't work when it comes to making money. I see so many people want to go really, really fast, but actually that will be counterproductive. Always think when you place an order, the gun is pointing this way. Unless you pull the trigger, understanding the gun is pointing forward, you've lined up your target perfectly, you've assessed all the other options on the table, then you are safer. But it's not necessarily certain that you are always safe. Everything inside crypto is probability. And if anybody reaches out to you and says, I can guarantee certain percent returns, run, because they're not real. But coming back to Wells Fargo, we can see that we're literally at the start of the massive adoption phase. Just remember, when we were in the early 90s, people didn't even comprehend what the internet was. The internet actually derived out of BBSs, or bulletin board services, and it was a text-based thing way back in the day when I founded my internet service provider. It absolutely changed the world, and crypto will do exactly the same thing. Remember, you're really early. This thing has a long way to go, and crypto has incredible power in it. And it's so tiny. When crypto actually takes off, you're going to see adoption that will boggle the mind. And remember, there's more than enough money to achieve that growth. Crypto technical analysis is not just the study of price charts, it's a complete philosophy. We focus on real wealth and a positive excellence life trend. We understand the rules of money, the rules of wealth, and we understand that riches come and go, but wealth is something different, and it can be unlimited. It's tied to our service to others. When we look at this particular Wells Fargo Investment Institute report, we can see cryptos are definitely near a hyper adoption phase. And due to the exponential nature of crypto and its very small market cap in terms of the total market, we're going to see things that will boggle retail investor and traders' mindsets. They won't understand what is happening. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators and ambassadors for keeping our community safe and helping others. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the link to the Crypto Trading KS Masterclass. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.